When we're investing in the stock market, it's an amazing feeling to have your money on autopilot. Now, the best way to do that is to invest in reliable, time and tested, recession proof companies. The stock that we're going to be covering has paid increasing dividends for decades and has beat the market in total returns. This truly is a dividend growth stock. So if that sounds good to you, make sure you hit that like button and subscribe. Today we're going to be talking about Lowe's, ticker symbol LOW. Now, Lowe's at one point was the largest hardware chain in the United States until it was surpassed by the Home Depot in the late 80s. Lowe's is in the consumer discretionary sector, so finally we have a company that's not in technology. Lowe's currently has 2,197 stores across the United States and Canada. Currently they are headquartered in Race City, USA, North Carolina. I actually just started a position in Lowe's and plan on dollar cost averaging over the coming years to continue to accumulate more and more shares. One of the reasons why I really like Lowe's business model is because it offers products that anyone who lives in a home, which is fortunately most of us, needs at one point in their lives. We all need appliances, flooring, hardware, home renovation, lawn care products, plumbing, home decor, and often these are items that only have a useful life of so many years, so people will always be coming back to buy more and more. Lowe's also offers installation services in many of their product categories. So if you're someone like me who should never be trusted with a hammer and nail, they got you covered. According to Lowe's, the home improvement sector is a $900 billion sector and it's only growing. We can see evidence of this when we look at Lowe's steady revenue growth over the years. In 2006, they only had $41 billion in revenue, and by the time that 2020 rolled around, they had now topped over $94 billion in revenue. That is superb, growing revenue streams year after year that shows us that this is not by any means a dying business. In terms of margins, once Lowe's subtracts its cost of goods sold from its revenues, we see they have a very impressive around a 35% gross margin, and it's historically been around this mark, which is pretty good for retail. In terms of profit margins, that's only about a 7% margin. When we look at their very impressive free cash flow numbers, which was $9 billion this past year, this is the money the company has left over after paying for improvements to its business like capital expenditures. I have to wonder, does Lowe's get an employee discount if they do renovations and improvements to its own facilities? Another really impressive part about Lowe's is how rampant this company has been in buying back its own shares. In 2005, they had about 1.6 billion shares outstanding. Today, that number is less than half that, around 750 million shares outstanding. In late 2020, Lowe's board of directors authorized another $15 billion towards share repurchases, in addition to the $10 billion that they had authorized just 2 years prior. Now, share buybacks can be done irresponsibly, but according to Lowe's, they have had significant customer demand and operating performance for the fiscal year that drove a substantial increase in cash flows from its operations. Plus, it's really cheap to borrow money these days. Lowe's did suspend buybacks during the emergence of C-19, but it reauthorized them during Q3. So it really does seem like Lowe's is making the best of this boom in business to reward shareholders. And we haven't even talked about the best part about Lowe's, and that is their ever-increasing dividend. Lowe's is one of the most reliable dividend stocks out there, having paid a dividend in 58 straight years, making them a true dividend king. Not many companies can boast such an impressive record. Lowe's has actually never missed a quarterly payment since they became a public company. Now, that is a really good track record that proves that their business model has been able to stay successful regardless of the daily news, technological changes, laws, recessions, and consumer preferences. The dividend payment schedule that Lowe's follows is that of the February, May, August, and November schedule. Lowe's, despite giving shareholders a pay increase for nearly 60 years, just actually raised their dividend by a whole 33%. Now I know if we got a 33% raise at work, we would definitely be running around naked. Now this combined with their incredible share buyback program just shows how much they care about investors. Typically, the board of directors would not authorize such hikes and buybacks unless they were confident in the company's solvency and being able to do so. It's even more believable that Lowe's will be able to continue the streak because their payout ratio is only around 30%. That's not to say that Lowe's is at any sort of bargain right now. The housing boom and free time for C19 has really skyrocketed Lowe's share price. People had more time and money to spend on home renovations, there's low interest rates, and that encouraged the building of new homes, larger houses, and more just overall projects around the house. Even though Lowe's is up over 40% in the last year, according to the analysts who follow the ins and outs of this company, they anticipate that there's still more than 20% upside in this particular company, with a target price of around $230, and they have a strong buy rating from the majority of the 21 analysts. So hey, maybe there really is a lot in future gains for Lowe's, and this increase in business from the housing boom isn't just temporary. When we look at the total returns over the past 10 years, Lowe's has left the S&P 500 in the dust. A $10,000 investment in Lowe's 10 years ago would be worth about $100,000 today, compared to just $40,000 in the S&P 500. That's a 21% annual return compared to the market's 15%. Let's just hope that history continues to repeat itself. So I really want to know, do you own Lowe's stock? Let me know why or why not in the comments below, and make sure to help out a small-time YouTuber by hitting that like button and subscribing. And if for some reason you really like to hear my voice, remember my videos are always available wherever you get your podcast under the Collect Cash podcast name. And I will buy, stash, collect cash you later.